Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly trading plan webinar. I want to welcome everyone back. And for the new visitors, I want to welcome you. I hope this will be useful for you, and that's the whole purpose. And the idea is in the title. It's pretty much to create a trading plan. And as I like to say, you plan the trade and then you trade the plan. Otherwise, there's a lot of impulsive and unprepared trading, which is most of the time causing unnecessary issues. So this is something that we will be talking today. And a few things about myself. My name is Simon Friedman, and I'm one of the senior account managers at AvaTrade. I've been involved with trading since June of 2000 when I started in one of the proprietary firms in New York City. I switched few firms and I was doing it for 11 years. And after that, I was mentoring and educating other traders. And currently, as I said, I'm working with AvaTrade as a senior account manager. Agenda for the webinar. It's not necessarily in the same order, but we usually cover indices, stocks, commodities, and Forex. And these are the ways of following us and using the information of AvaTrade. There's a YouTube channel that has a lot of information that's being updated daily, including this webinar, or most of the webinars are being posted on YouTube. You have a Twitter account, you have Telegram account that you can follow. And please use this information. It could be very useful, especially the YouTube channel. Like I said, there's a lot of educational material there, tutorials and other information. Now, before we go any further, this is the risk warning, the usual thing that whatever you see or hear here, not to take as an advice for trading. And if you have any questions, you can visit the AvaTrade website and get more information there. So we like to start with the big picture, and the big picture is the following. Unfortunately, I can't say that the war is over. I really can't wait to do it, and I say it every week. I hope that one week we're going to say, congratulations, it's over, and rebuilding starts in Ukraine. Not yet, unfortunately. And affects everything, including the markets. We have Feds increasing the rates. We have inflation that is not really falling much. And a lot of countries besides US or territories, they have issues with rising inflation. That's Europe, that's UK, and other areas of the world. So market in general, the equity markets, it's been selling off. We'll be seeing in a moment on the trading platform what's been happening there. And commodities being crazy. It's all about geopolitical situation, and that's oil, natural gas. We'll be looking at them in a moment. So in general, it's a risk of trading. The safe haven, it looks like they start gaining some power. We'll be talking about it. We'll be talking about gold, Japanese yen, and Swiss franc as well. And before we go to individual instruments, this is the economic calendar that I like to bring every week. And again, it's important that you follow it, you prepare. Like I always say, even if you knew exactly what the outcome will be, you wouldn't be able to really predict how the market will react. But I kind of stick to just knowing that things are happening, so I don't get caught in or by surprise. So I know certain things are happening, and of course, it's important to know what's happening in the area or part of the world that you're involved with trading instruments in that part of the world. So these are the things that I take out with the high impact. and there's definitely more things with the middle and low impact that you can follow up, but I just bring these as the most important. So we have on Monday the governor of Bank of England speaking. Let's see what I have to say on inflation, on interest rate, retail sales results on from New Zealand. We have PMI from Germany. We have PMI from European Union. We have PMI from UK. Tuesday, it's all about PMI numbers. Wednesday, monetary policy statement. Maybe we'll see some surprise with interest rate from New Zealand. That's going to be followed up, of course. Bank of Japan Governor Kuroda speaking. That's very, very important because as we speak pretty much every week about yen, and it's been weak lately, and they're trying to bring it back to the strength. So maybe some decisions will be made over here. Durable goods orders from US. We have FOMC minutes. This is probably the most important of all of them. We'll hear the results of the last meeting of FOMC. They'll announce what's next in monetary policy and interest rates and so on. We have GDP numbers from US and retail sales from Canada and retail sales from Australia closing the week. So these are the events. And now we'll switch to the platform. And there's a purpose I started with this instrument, just to show you how panicky the selling is of. And this is Walmart for the past week, since they reported not such a great news, and projections are not so great as well. So it was just a straight, it's a gap, another gap, and another gap. That's really, it's a flashing sale. Nobody wants it, it looks like it. And even the last day, it was a little bit of a bounce, but still closed in the red. So just to show you a few things here. Now, in general, it's a risk off, and it's all about equities. It's a lot of selling. We'll be talking about some individual stocks. I want to bring S&P 500. So all the investors or analysts and pretty much everybody involved with trading, they were watching really how the week will close with S&Ps, because since the highs, if you take a weekly chart, since the highs of 48.7, I think we can draw the Fibonacci just to see if they're really right here. I'm not sure. You're gonna take it out, not to confuse you. Anyway, according to the analyst, that they were watching the 38, 37 area on S&Ps, because if we did close below it, that would be officially 20% below the highs, and that would be officially announced as a bear market, S&Ps in general in the markets. But the last day, actually the last 2.5 hours, we really bounced, and I will bring to you the 30-minute chart. We were way below that number. We reached the level of 38.08 and a quarter, and then the last 2.5 hours we really ran, and we closed right above 3,900. So this is the question that we should be asking, or we can't really have the answer. We'll have it, I guess, the end of next week. But we should know, or we should try to think, is this a bounce into the weekend? I mean, that's the question I've been asking myself. Is this just the weekend bounce and take the profit? People are really afraid to take it overnight just in case some great news will happen and we're going to bounce over the weekend. And nobody wanted to go short, I guess. Just my speculation, my guessing here. Or this is just, or we're really starting to bounce from here, and we might retest these levels around 4,000, 4,100. I guess we'll find out. So this is the thing. Again, the S&P's bounce from the critical level below which it would mean that we're in the bear market. I really don't know how they make these decisions. For me personally, again, I'm not a super analyst on the Wall Street, but for me, as I announced to you, I think a few weeks ago, the moment we broke this level over here, for me, it's a bear market. It's a weekly chart, breaking the previous low after the lower high. For me, it's a bear market. Reaching these levels and closing below it, as we did this week, for me, it's a bear market. But again, I guess they have their own terminology, and I'm just the messenger. Don't kill me. Now, another thing, very, very important thing, that Dow Jones actually closed down for the 8th week. And according to some data, this didn't happen since 1932 or something. I don't know where they get the data from, but it's really, really looking bad over here. So we have 8 straight weeks down on Dow Jones and 7 straight weeks down on S&P 500. Let's see, 1, 2, 3, 4, 5, 6, 7, and Nasdaq as well. 1, 2, 3, 4, 5, 6, 7. So again, if you look, let's switch to daily chart. On daily we're way below all the major the 50, 100, and 200 moving averages. So if you take Nasdaq, it's between 100 and 200. So if we continue sliding, we might hit the 200 and then see what happens there. Dow Jones, it's second week, we're below the 100, also in between, and S&P 500 also below 100, on the way probably to retest the 200. Again, we're not going to guess. Okay, guessing it's in trading doesn't really work. We could try to predict things and kind of be hopeful that our plan will work, but not to have a stubbornness in our opinion. Otherwise, sometimes it could be hurtful. So just speaking from my own experience. So indices, again, we bounced the last 2.5 hours on the US indices. European indices, not as weak as US, and actually FTSE had a green day. French index, not really, and DAX 2 green days in a row. So let's see. It's a very interesting week. Are we going to bounce from here? Are we going to continue lower? That's really, really crucial here. Now, China, I think it's also a very strong indication of maybe market is getting back to life, because China has been really paralyzed with COVID and shutdowns and everything else. And the last 2 days have been really pretty good. And on the daily chart, in a long, long time, we haven't been there since January. We closed about 50 moving average. So that's kind of hopeful that we might see continuation. And again, we are facing this resistance here that we tried a few times. From here, last time we made the lower low. So if we do close about 13,500, we might see continuation in China, and I think China could really lead over here to some bouncing here. And again, let's see what happens. Now, next week is really closing the earning reports for the first quarter. So we have a lot of companies reporting. We have Zoom reporting, Best Buy, Toll Brothers, NVIDIA, Alibaba, Costco, Dell Technologies, Dollar General, Dollar Tree, Gap Macy's, and others. So it's very, very important to see how those are. So far, retailers got really killed on the bad earnings. And as a logical person, I try to think retailers are not doing great, and the whole economy is built for retailers, right? All the products and all the things that are being produced, it just to be sold, those products to be sold to consumers. And if the retailers are not doing so great, the consumers are not really in a rush to buy new appliances or anything for that matter. They're really having, and that's the reality today. The gasoline costs a lot of money. Electricity costs a lot of money. Food costs a lot of money. Inflation is there. The price is going higher. And again, the regular or average consumer will think twice before running and buying a new TV or car or anything that is not a necessity. So again, it's just my logical thinking here. So again, we established that we've been really selling off, and I'm using S&P as a general market. That's what's being used by most of the analysts. So it's very crucial here. As you see, there was a consolidation here back in March from which we made highs here, and we're back to this level with all the tails, but we're still holding this 3,900 area here. So again, let's see what happens. So let's move to stocks. And Cisco reported the stock really sold out strongly with the gap and tried to bounce on Friday. Tesla, as a leader, it's been having issues. I think in general the market is selling, of course, and as I like to say, the market is selling. It's going to just pull in the best stocks as well. But besides that, Tesla's been having issues, of course, with China, with the shutdowns. Also, some speculations with the Twitter buyout really caused some sell-off of the stock, as one of the things that Elon Musk had to sell a few billion worth of stock in order to put a down payment. But then the deal is still not happening, and I don't know if you're following it, but now they're discussing, the CEO of Twitter with Musk. They are still discussing and talking about things because Musk wants to know that the accounts, all the live accounts are, or the fake accounts or the bots are not more than 5% of the total of the accounts. So I think they're still in negotiating and checking that thing. And meanwhile, Twitter, as we know, he offered about 44 billion, which was about $54 per share, and that's where we reached. And that was in April, right? And then we really sold since the deal was put on hold. So now it looks like we're bouncing here. Nobody knows if the deal will still go on. I don't think even Musk knows. I guess it's due diligence going on there. So that's Tesla and Twitter. Walmart, we saw the Walmart, what happened there. It was a big sell-off. Now, what caught my attention, actually, Netflix is not selling on the market, really tanking. Netflix, it looks like it's actually, after bottoming here at 162, it's been holding around 180, 186. So I really don't know what it means. Is it ready to bounce? But it's not really getting pulled with the market in general. So that's very interesting. Citigroup, another interesting candidate here for buying probably. If I'm not mistaken, Warren Buffett announced that he invested more into Citigroup after kicking a few of the stocks out of his portfolio. So that's, I think, was the first reaction here on the 17th with a gap, but we couldn't break the 51. And it could be potentially that it's going to continue going higher here. So that's something to watch. Also, AT&T, I don't remember if I spoke about it last week, but I spoke about a few weeks ago, when AT&T spin off the entertainment and just remained a purely telecom company, that investors are really happy and they're looking forward to increase their profits here. And if you can take a look, we pushed out of 20 or about 20, and then we dipped in again, and then we closed about 20. So it looks very interesting, and it has the potential to move higher. And a lot of analysts have been talking about it. So it's AT&T for you. Now, let's take a look at the big guys here. Amazon sold out, and the big techs are pretty much the ones that pull the Nasdaq heavily to the downside, and that's Microsoft, Of course, Google and Facebook below 200 again, and even Apple, that was the last one really holding, and that was holding around 150, and we went on Friday as low as 132.5, and we closed at 137.5. So a lot of pressure. Tech stocks are really sold out. Again, I don't like to repeat myself, but it looks like I'm doing it anyway. We could see the bounce next week, or we could see just continuation to the downside. So that's it pretty much with equities, and let's move into commodities, and we'll start with crude oil. Crude oil is really struggling, breaking 111, and the investors are really holding these levels here. We had few sell-offs, and then we came straight to 111 again. We had a high low, and then I guess in order to go higher, maybe retest the highs, we need to close about 111, 112 area again. We are about all the 50, 100, and 200, of course. So it looks very bullish here. And again, it's all geopolitical, and it's all about Russia. So nobody knows how long the war is going to go. We don't really know what's going to happen. So far, Europe is still buying natural gas and oil, and I think some of the countries actually bend to the rules of Putin, and they're buying rubles and paying in rubles. I don't really know the details, but it looks like it. So that's crude oil, again playing with 111. We have natural gas that after this retesting at around 7, we came back to 8, and a few days ago we tried 8.5, and we're sitting right about 8. So that's the tail over here, 8.06, and we closed exactly at that level. So we could continue the same thing, geopolitical. We don't know what the Europe is doing. They say they're gonna manage by the end of the year to cut off all the Russian energy supplies. Really don't know what's gonna happen there. So that's crude oil, natural gas. Now gold, and we'll talk about yen and Swiss franc later on. Gold's been, as the market was selling, and gold's been gaining some strength over here after retesting 1800 again. So we back to almost 1850, and we kind of hitting the ceiling of a 200 moving average on the daily chart. So in case gold will get some legs to move higher, we need to really close about 1850 and close about the 200 moving average here in order to go. Now for that, logically we need dollar to get weaker. I'm not sure if it's going to happen, because we'll watch dollar in a moment. It's been correcting a little bit, and we need the market to crash more so the safe haven get triggered again. So that's really massaging this key level around 1850 on gold. Let's take a look at the soft commodities. They really ran in the past 3 days. They really cooled down, and corn sitting on a 50 moving average, soybeans bouncing. So again, we are approaching probably level of support 1156, 1150 here on the wheat. So we did have a strong move up again, and now we're coming to retest the support. So 1157 around that level could be a support for the wheat. And copper is the last that I want to bring it up to you, and it's been moving with it's interesting. Take a look. The last 2 days went up, and I just want to bring China. China did the same thing, and so far it's been working very nicely. So it works in correlation, as China is one of the biggest users of copper and used in construction, and copper bonds. And I think I mentioned that if China index bounces or economy bounces a little bit, so the copper would be the one to watch. And it's nicely, it's been really heavily sold. We touched around 4, and now at 4:30 closing here. So we'll be continue watching it in case the indices or the equity market bounce, especially in China. We might see continuation, maybe higher to retest the first retest here with 200 moving average. That's at around 4.5 or 445. So that's it with commodities. Let's move to Fxworld, and if you can take a look here, after reaching 105, we've been really sliding lower on a dollar index, on US dollar, and if we are continuing around 102.5, 102, we could be testing the support areas over here. So on this move on the dollar, a few things, and I'm going to start with following the gold. We have yen and Swiss franc gaining some strength. And if you take a look, dollar sold against the yen, but what's especially in the last week, Swiss franc was the strongest one. Take a look how dollar sold against the Swiss franc. I really don't know what the reason is besides the safe haven, but we are really seeing the strength of the Swiss franc. So of course, dollar got weak, but it didn't get as weak against other currencies as it did against the Swiss franc. So something to watch. And technically, I guess we need to be watching the lows of this drop here, and that's 0.9696. So 0.97 roughly would be the level to watch for Swiss franc. Now, what could happen here? Again, if dollar regains the strength, which is logical as we're facing more increases in interest rate, we might see the bounce from here, because the drop really happened very fast, and it did hold these levels over here, 0.97. And as you can see, the Friday we already bounced. So we might come, a few things might happen. We can continue up from here, or we can come and retest again 0.97, which potentially could be an interesting entry, knowing that it has a way to recover here. Again, it depends what's going to happen in the equity market, and of course, how dollar index will be acting. So these are the two currencies that represent a safe haven, together with a commodity they call gold. That's a classical scenario. It's a kind of a book scenario when the equity markets are selling, the risk of trading comes in, so safe haven gets triggered. So gold, Swiss franc, and dollar yen. Now let's take a look at majors, what they did in the last week. We did have a nice bounce. This is a weekly chart on euro. We did have a nice bounce on the pound. Australian dollar, not as strong of a bounce. New Zealand dollar, not strong of a bounce. So we might continue to the upside. Again, technically, we are above 105, which is a key level for euro. And if we continue higher, these levels here, let's take a look, 106.30, 106.50 could be hard to break, because from here we made a low over here. So, and the pound also for the whole week, it's pretty much couldn't break this level. The initial move was a strong one. We reached 124.98, so 125. And then on Thursday, looks like it had a try to go higher. We couldn't. And 125, let's say, even, it's the strong level of resistance on the pound, something to watch. So again, in general, dollar is in the correction mode here after making this huge move to the upside. If you remember, we spoke about 99, 100, 101, 103, 104, and then reach 105 level. And take a look at the weekly chart. The 103.76, this is the level here, 103.80. We went below it again. So again, we could see a continuation of correction here, and we could actually go as far as 100. Everything is possible. And if we are looking to go higher, we need to close above 103.80 again and go retest or re-challenge 105 area on dollar. So of course the other majors going to be acting against the dollar, as we'll see the strength of a dollar or weakening of a dollar. So that's the FX. And let's take a look quickly at Bitcoin. There's a lot of issues with crypto world. Some warnings coming out, some restrictions coming out, some regulatory or regulational actions are coming out, and it's all about the Luna, I think, and a few others that really tanked. They lost most of its value. And Bitcoin is playing around 29. It's really, if you can take a look, when was this issue with across the board with cryptocurrency? We reached almost 25,000, and then we bounced, and we're pretty much in a very, very tight channel here between 29 and 30 and 31, about 2,000, and it's building up now. After this drop and consolidation, if we continue, if we close below this tail, anything could happen. We could continue, and I mean, technically speaking, we are between 100 and 200 moving average, probably right in between. So potentially, if nothing great comes out, and it doesn't look like it, a lot of really pressure on the cryptos. So we might see in the coming days or weeks retesting of 22,000, and that's a possibility. And as of now, we're really holding this level over here. This is from which we started a move to the new high, and this was the week of July of 2021, July 18th. So as you could see, there's a multiple retest of these levels, and we went below, and now we right sitting on this level. So the level is around 29,300. So that's something to watch. And that's it pretty much. Just let's summarize what we spoke about. And it's the following. We have the same situation as far as the Fed's continuing acting and really taming this high inflation. We have the war going on that creates a lot of pressure on the equities and a lot of speculative or volatile trading on energies, on the commodities. We have safe haven gaining some strength because of a sell-off on the equity market, and that's gold, Swiss franc, and Japanese yen. We have last week, the upcoming week, the last week of US companies reporting earnings for the first quarter, and it's an intense week. We have a few major companies reporting, and we have FOMC meeting out of others and other announcements that we spoke about. So again, it's very crucial. Will the S&P continue down and announce, so to speak, the 20% sell-off from the highs, and that officially brings it to a bear market, or will we see a continuation of this bounce and possibly some buying opportunities in the stocks? We don't know, but the mood in general, the market, if you read the articles, it's recession, 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 and one more time recession. So some say it's going to be the end of this year, some say 2023. Some analysts are saying that this bubble is going to burst worse than the year 2000. I really don't know. I like to hear the opinions. I tend to stay away from trusting it, but I think all of us should use our own judgment, definitely be on top of our risk management, and have excitement and happiness as we trade, and in general, be happy in life. I wish everyone an amazing week, and stay happy and healthy, and we'll be back next week. All the best.